fam, what's good, what's good? Welcome back to another one. So now we will be covering fair value gaps, right? This is literally like that last thing you're going to find yourself waiting for when it comes down to your entry method, right? So your fair value gaps, you know what? This pattern is simply something that you want to find yourself waiting for after price takes out a major high or a major low area, right? Then you want to find yourself waiting for this pattern to occur. Okay, now let's look at our fair value gaps. Now, first things first, right? Let's look at our rules over here. First thing you want to find yourself doing is literally just change your time zone to New York, right? And our trading areas will literally be from 8 o'clock until 5 o'clock, right? This is literally like a normal job. This is when our New York session steps in, right? And our New York Stock Exchange will step in at 9:30, right? So from 9 o'clock, this is basically when we will find ourselves prepping for those nice overall volatility to kick in inside the market, right? The New York session, this is when a lot of volatility is basically being kicked inside the market. And you know what? Us as traders, we want to find ourselves participating in price when there is volatility. Okay, now let's look at a few rules when it comes down to our fair value gap. Right now, rule number one over here, wait for price to take out a swing low, right? Rule number two, wait for price to take out a swing high, right? Rule number three, wait for price to create an aggressive move towards the upside, basically displacement, right? And after price have created this right there, you're going to identify your fair value gap, right? And after identifying your fair value gap, you know what? You want to identify whether your point of interest is inside a discounted area, you know what? And then, you know what? Rule number 6, execute your trade and place your stops below the candle which created the fair value gap, right? To be safe, you can place it at your actual low, right? And then rule number 7 over here, you can find yourself targeting your 50% or your nearest high. Now, Diego, what did users say right there? Let's look at the sketch. Let's look at this sketch right over here. Boom. Now, this sketch right here, right? This will basically be after price is taking out a major swing low, right? So we just took out some sell side liquidity. We want to see price have a move towards the upside. So how are we going to find ourselves being reactive upon that? We are just going to simply wait for this pattern to find itself occurring. That's it, right? That's literally it right there. So clean. First things first, you are going to wait for price to find itself literally take out a nice little swing low right there, right? A nice swing low which is coming through right there. And after price basically took out this nice little swing low, right, where we basically have sell side liquidity, if we are coming from an overall bearish trend, what will this be over there? A BO is, right? Because we are simply following market structure. Okay, now after this low being taken out, we want to wait for an aggressive push towards the upside, right? Basically some displacement and take out our swing high, which is coming through right over here. Now, if this is our significant swing high, right, what will it be right now? Now we will literally have a MSS, a market structure shift. Right? So with us now seeing that we have a market structure shift, this is now telling us that, you know what, we are moving from a bear market into a bullish market. Now, how are we going to find ourselves being reactive upon price? After price basically create this displacement, can you guys see that we are now basically creating a higher high right there? Right? We are creating a higher high, basically changing market structure, right? So after price creates this actual higher high, all you're going to find yourself do, or all you can find yourself do is literally get out your Fibonacci from your low to the high of this range, right? This leg right there, and identify where's your discount area, right? And your discount area will literally be everything from your 50% to your 0% right there. This will basically be your discounted area, and this is where you want to find yourself seeing your fair value gap. right? This is where you want to see your imbalance. So once you identify your imbalance inside your actual your discounted area, this is where you're going to find yourself being patient and wait for price to literally pull back into your discounted area, and you are going to find yourself going long if you find yourself identifying your fair value gap right there, right? So you can find yourself placing your stops below the candle, which basically started off the fair value gap, or to be safe, you can literally just, you know what, place your actual your stops below price over there, right? Now obviously, if you're gonna see price have an actual fair value gap right over here, you're not going to find yourself targeting your 50%, right? Instead, you're going to find yourself targeting your nearest high, which is that area right there. Now, Diego, when will you target your, or when can you find yourself targeting your 50%? This is simply if price is going to have a deeper retracement, right? Opening up your actual opportunity. Now you can basically find yourself targeting your 50%. Most importantly, I want you guys to focus on getting that 1-to-2 ratio in. Okay, so that is how you're going to find yourself approaching a nice little fair value gap when it comes down to a buying opportunity. Now let's look at a selling opportunity right over here. Let's look at the sketch. Okay, now what we can basically see is price took out a nice swing high, which came through right there. Right, we have some buy side resting at this area over here, and with price basically continuing in this bullish market, what does this consider as being a BOS, right? Because we are breaking structure, but price then found itself tapping into a major area of, you know what, buy side on a higher time frame, maybe like a 15-minute or 1 hourly time frame, right? So now all you're gonna find yourself doing is wait for your fair value gap pattern to find itself occurring. Okay, so now you see that, you know what, that major area is being taken. Now all you're gonna find yourself doing is wait for some sort of an aggressive move back towards the downside, which will basically be your displacement, right? And after you seeing an actual, you know what, a high being taken out, now you want to find yourself seeing a swing low being taken out right there, where we have some lovely sell side liquidity resting, right? So after seeing this momentum towards the downside, you can get out your FIB from that high to that low right there, right? And identify inside the premium area where you have your fair value gap, right? So if you guys are going to see your actual fair value gap coming through right over there, right, this is simply where you're going to have your actual trade, and you are going to find yourself being patient and wait for price to pull back into your actual fair value gap. And that's where you're going to find yourself, you know what, looking for some lovely short opportunities. Where can your stops be? Your stops can literally be above this high over here, or just simply above the candle which started off the actual fair value gap, right? So let's dive into the actual rules. Once again, rule number one, you want to see a swing high being taken out, right? As we basically did right there. Rule number two, you want to see a swing low being taken out, which is this area right over there. And you guys can see that, you know what, we took out that actual swing low right there. Wait for price to create an aggressive move towards the downside, which will basically be considered as displacement, just an aggressive move to the downside, right? There we had our displacement towards the downside. Identify your fair value gap. Where do you want to identify your fair value gap? You know what, you want to identify whether your point of interest is inside a premium area, right? Execute your trade and place your stops above the candle which created the fair value gap, right? Or you can simply place your stops at the high right there. You can target your 50% or your nearest low. Okay, so that is it when it comes down to our fair value gaps, right? These are the little, well, I don't want to say little, but these are the rules you need to find yourself following when it comes down to your fair value gap, right? So in the next slide, we're going to have a nice charting example, right? So I'm going to see you guys in the next one. It's me, your boy D. I'm out.